Hello dear viewers, my name is Clive Thompson. What if I told you that the US government has a secret plan to revalue gold at $15,000 an ounce, and it will wipe out the current year's deficit and reduce the US government debt, and it won't cost you a single penny? Before I get on to that, I've been investing money for 50 odd years. I've made a lot of mistakes. I don't make so many mistakes these days, and my mission is to help you manage your finances better, to learn how to invest in the stock markets, how to invest in gold or gold miners or Bitcoin or equities or property or any other type of investment. I'm here to teach you about investing your money so that you can prepare your own financial future and your retirement. And one of the things you may have noticed from some of my recent videos is I sometimes tell a little story. In the middle of the video, it's a story which is quite often unrelated to the video in question, but it's an anecdote from my career of being an investment manager and a wealth manager over the last 50 years. For example, if you watch some recent videos, you might have heard the story about the Black Widow. That's the lady, very sexy and beautiful lady, who perhaps was a husband killer and managed to entice me into her apartment when she was dressed like a prostitute. And then there was that story of this very hot French housewife who had me sat down in the kitchen while she was sitting on a high stool in a mini skirt, and unexpectedly she suddenly calls out to her husband, "Chérie, tu viens dans la cuisine." Husband, come quickly into the kitchen. And then she orders him to pay her $500,000 on the spot. So watch my previous videos if you want to hear these stories, but there's a nice story coming in the middle of this video. But let's get back to the question of $15,000 gold. It sounds impossible, right? But this plan is not only possible, it's been done before, and I think it's in the making as I make this video. And the key to all this is gold. We're talking about a potential revaluation of the US government's gold holdings from the statutory price of $42.22 to $15,000 an ounce. Today, I'm going to break down how this could happen, who gets rich, why the whispers about this plan are getting louder in the highest circles of power, and how you can know when it's about to happen and prepare yourself. Let's start with a simple fact. The United States government owns a lot of gold. It's about 261.5 million ounces to be exact. But here's the crazy part. On the official books of the government, this gold is valued at just $42.22 an ounce. That's the statutory price of gold set in 1972. The gold thus has a book value of only 11 billion US dollars. But at today's market price of about $3,300, that same gold is actually worth over $862 billion. And if gold were to be revalued to $15,000 an ounce, that gold would be worth over nearly $4 trillion. But let's go back in history a little bit. Where did this gold come from in the first place? Currently, it's held by the US Treasury, which is a branch of the US government. But it wasn't always theirs. Back in 1934, in the middle of the Great Depression, President Franklin D. Roosevelt signed the Gold Reserve Act. This law forced the Federal Reserve, who held the gold, to hand over all of its physical gold to the US Treasury. And in return, the Federal Reserve got a piece of paper, an IOU called a gold certificate. If you look at the Fed's balance sheet today, it's the very first asset listed on the balance sheet. It's called gold certificate account, and it's valued at that same $11 billion. But it's just an accounting receipt. It's not a claim to get their gold back, ever. The Federal Reserve cannot and may not convert that certificate into gold, and it has no right to ask for redemption of the certificate. So the only way it can be redeemed is if the Treasury so decides, and if they redeem it, they'll redeem it at the statutory price of gold, i.e. at $42.22 an ounce, which is $11 billion. So that gold certificate is on the books as $11 billion. It's only worth $11 billion, and it never will be worth any more, and it can't even be cashed in, at least not at the holder's behest. So we go back to 1934. All that gold was transferred from the Federal Reserve to the Treasury as a result of the Gold Reserve Act. But Roosevelt wasn't done on that day. The next day, he devalued the US dollar by over 40%. He did this by changing the official price of gold from $20.67 an ounce to $35 an ounce. Or more precisely, as it was worded in his proclamation, he reduced the gold weight of the dollar from 25.8 grains of gold 9/10 fine to 15.715 grains of gold 9/10 fine. Obviously, we know it today as an increase in the price of gold from $20 to $35. Now, this move, this genius move at the time, created a $2.8 billion paper profit out of thin air. And Roosevelt made absolutely sure that that profit went straight to the Treasury, not to the Fed. He said, and I quote, "We believe that all profits should revert to the Treasury of the United States for the benefit of the country as a whole." And with that, the Fed was left with a bit of paper and nothing more. Obviously, their real gold was now gone. The move shocked bankers in London, Paris, and Zurich. The mighty US dollar that they held had suddenly lost 41% of its value overnight. Foreign bankers saw it as an aggressive, unfair trade tactic. It was a clear signal that the old rules of money no longer applied. So why am I talking about something which happened 90 years ago? Because today, the USA is facing a similar crisis. The national debt is spiraling out of control. The interest payments alone are becoming one of the biggest expenses of the entire federal budget. And worse is to come. The government has to refinance about $9 trillion of its debt over the next 4 years. That's roughly 1/3 of its debt. This debt was issued when interest rates were low, about 1.5% to 2%. Today, interest rates or yields on bonds are closer to 5%. That refinancing cost, which is coming over the next few years, is going to cause the government's interest costs to explode. Something has to be done. And that's where the 1934 playbook comes into focus. The idea, gaining traction, is to repeat Roosevelt's move, but on a much grander scale. A revaluation of gold to $15,000 would generate $3.9 trillion of windfall for the Treasury. It would wipe out the entire budget deficit for 2025 or 2026 when they do it, and it would allow the government to pay down a huge chunk of the national debt. So how would this work technically? Because it's a kind of monetary sleight of hand, but it can be done in 4 simple steps, which I'm going to outline. And I'm not asking for any Nobel Prize for explaining this. First, the Treasury would buy back the gold certificates held by the Fed, paying the value, $11 billion. Secondly, the President would issue an order raising the official statutory price of gold to $15,000 an ounce. Thirdly, the Treasury now sell all of its gold to the Federal Reserve at the new price, the new statutory price, receiving in exchange $3.9 trillion of newly created digital cash. And finally, the government would repeat the 1934 trick, which is to pass a new law forcing the Federal Reserve to hand over that gold back to the Treasury in exchange for, you've guessed it, another gold certificate. The end result: the Treasury's got its gold back, plus it's got $3.9 trillion in cash created out of thin air. $3.9 trillion in cash created out of thin air by the Fed. And since the gold certificates aren't counted as government debt, the national debt could be drastically reduced, and, of course, in the current year, there would be a huge profit made by the Treasury, resulting in a budget surplus instead of the huge deficit that everyone's expecting. So who wins in this scenario and who loses? Well, the biggest winner, by far, is the US government. But the other beneficiaries would be anyone who owns gold, or anything related to gold, such as gold mining stocks. Central banks in countries like Russia and China would see their assets soar. Individuals who own gold coins or bars would see their wealth multiply. And of course, gold mining companies would become incredibly profitable overnight. Now, probably you're thinking this just benefits the rich. And at first, you're absolutely right. I mean, let's consider Scott Bessent. He's the Secretary to the Treasury, one of the most important positions in the country. He has a say in what will happen. But before he was Secretary of the Treasury, he was the founder of a major hedge fund called Key Square Group, which had exposure to gold mining stocks. And before that, he was part of George Soros's team, the man who broke the Bank of England by betting against the pound. So taking big bets is something that he will know all about. Now, whilst he's probably divested himself of these private interests, probably as a requirement of becoming, taking office as Secretary of the Treasury, his public statements are what are most interesting. And this is where I get the information to say that remonetization of gold, probably at $15,000, is under consideration as I speak. So what Scott Bessent has said, he has talked about the need to monetize, and I'm using words he used, monetize the asset side of the US balance sheet. Now, if you're a financial insider, you know that's a clear code phrase for revaluing gold. Whilst he didn't use the exact phrase revalue gold in the context of the US balance sheet, the single most undervalued and readily monetizable asset on the balance sheet is the nation's gold reserve. It's crystal clear that when he says monetize the Treasury's assets. He must be talking about gold. There is nothing else that can be monetized. Now, I don't want to over-dramatize here. You can listen to me, and then you can go and do a Google search or ask ChatGPT to check what I'm saying is true. And then you can choose to take action or not to take action. But just remember, those are the exact words of the most important person in America when it comes to the soundness of the United States finances. And the way to monetize gold, or rather, let's say the way to monetize the Treasury's gold, is simply to repeat the 1934 sleight of hand. It was done before, so why not just repeat the trick? So, how likely is this to happen in the near future? Well, any plan this big would have to be kept top secret until the very last second. So you won't see it announced in the news beforehand. But there will be signs. The only advance warning you might get is a rapidly rising gold price and a falling dollar, without any obvious explanation. That could be a signal that insiders who knows what's coming are making their moves. Immoral, illegal, unjust, unfair, whatever. Prices often move before a major announcement, and there's very rarely any prosecution. But here's my little story that I promised you at the beginning. And since we're talking about insiders knowing what's coming in advance, today's story is all about that, about a man perhaps on the inside. It's a true story. So back in the early 80s, I was in my 20s, and I was working in the trust department of a major bank in the Cayman Islands. After work, many of us single expats would head down to an open-air bar overlooking the sea. It was called the Sunset Bar. One of my good friends worked as an investment officer across the street in another major bank. Like me, he was a British expat. We would often meet at the Sunset Bar, downing beer, until sunset. Well, and beyond. Naturally, we talked about investments, stocks, gold, gilts, Eurobonds, and of course, currencies. Back then, my bank didn't have any machines to get stock prices or currencies or anything like that. If I wanted to know the price or the exchange rate, I had to call a broker in the USA. Or, in my case, I could often call my friend across the street. He had something called a quotron machine. And with a quotron machine, you could get delayed data on stocks, on stock prices or currencies. And often, when we'd meet up after work for our drinks in the Sunset Bar, he would bring a printout from his quotron machine, which would list the midday prices for US stocks and give some news and currencies. As a result, I was often more up to date than anyone else in my office. I knew what prices were moving or what the major stories were. We had no international newspapers in the Cayman Islands in those days. They didn't arrive, and you couldn't pick up foreign radio stations. There was no television, of course. One day, we were in the bar, my friend and I, from across the road, and we'd had a few beers. And my friend recounted the following story. He had a client, and we'd often talked about this client. So this client was really good at foreign exchange trading. The client had a large credit line with the bank and was allowed to take long or short positions on currencies like the Deutschmark, the Swiss franc, the Japanese yen, or the British pound. I guess he could also trade the Italian lira or the French franc or the Portuguese escudo. I don't know where his lines lay, but anyway, this particular client of the other bank had a large credit line, would trade Forex big time. And this trader, who lived in the United States, was remarkably successful. He had an amazing track record, and his portfolio of currencies was growing in value far faster than if he'd simply placed dollars on deposit. So I would often ask my friend about how he did it. Apparently, the man was a university lecturer, and he was some sort of genius in mathematics. And somehow he could use the university's computer to figure out what currencies were going to do next. Of course, I was fascinated. At the time, I wanted to know more. I was convinced that somehow the past prices could predict the future. And it seemed, based on this man's story, that computers might be the way to predict stock prices. Certainly, he seemed to be predicting currencies correctly with his university computer. And I'd often press my friend for more information about his techniques. Though my friend didn't really know much, but that was his story about the way he did it. Anyway, one day we were in the bar and we'd had a few drinks and it was getting late. And my friend said the following to me. I called my guy at his university to give him an update on his execution prices. But he wasn't there. Instead, his secretary picked up. So being a bit cheeky, I asked her where he was. You know what she replied? She said, he's gone to his meeting at the Federal Reserve. Well, that was my spontaneous story about an insider. And perhaps today we have insiders who will be finding a way to secretly trade on the back of information they know is coming and you don't. And that's why I think before we have this move to $15,000 gold, you'll see the price moving up rapidly. You'll see the dollar moving down rapidly. And that will be your warning sign that it's imminent. So will gold be revalued to $15,000? We don't have any official confirmation of that, at least not yet. It could be more. It could be less. I think that would be a sensible price to move it to. All we know is that Scott Bessent has advocated monetizing the Treasury's balance sheet. And as far as I can see, the only asset, and the obvious asset, which could be monetized, is the gold. So the only questions I've got are when and at what price. I think $15,000 makes sense, but maybe he'll pick another one. We'll see. If we have such a revaluation, it will send shockwaves through the global economy. It could trigger a massive surge in the prices of other assets, like stocks or Bitcoin, as trillions of dollars of that new wealth in gold looks for a home. Dear friends, that's all for today's lesson and episode. I hope you found this interesting. Make sure to subscribe and hit that notification bell. I would like to thank everybody for the lovely comments on my previous videos. It's your nice comments that have encouraged me to continue to share my knowledge and information with others free of charge. As always, I'll try to answer any questions, at least for the next 7 days, if you put your questions in the comments section below. And if you just have a comment, I'll be sure to give you a thumbs up. Alternatively, if you have questions, you can write to me on LinkedIn and I'll do my best to answer them there. Until the next video, keep watching the markets and keep your eyes open for the signs that gold is about to be revalued upwards. Thank you very much, everybody, and goodbye for now.